Now it's time for stock picks. Today we are looking at the financial service sector with S&P Global Inc., the healthcare sector with CVS Health Corporation, and the tech sector with Marvell Technology Inc. And joining us to share his analysis on these counters is Timothy Kiarie from Scope Markets Africa. Thank you so much for your time. Timothy, quite interesting ones here. We are looking at different industries, so there is no one theme in there. Let's start off with your choice of S&P Global. Of course, we know them as the ratings, one of the big ratings agencies.
Yeah, thank you so much for having me once again. Looking at the S&P Global Inc., I think this company stands out as a compelling investment opportunity due to its diversified revenue streams, robust financial performance, and also in terms of strategic positioning. For instance, if we talk about maybe to mention the financials, we are looking about 5.58 billion. That is operating profits. With an operating margin of that 9%. So if you look at the balance sheet also, it's really showing some quite good figures because if you look at maybe probably debt to equity ratio, we are talking about 30%, which is not really that badly off.
Yes.
So yeah, it's one of the company that stands out, especially in terms of credit ratings, market intelligence, of course, offering data, analytics, and insight into the financial professions. So, and you know as well, it's a commodity insights because it delivers a pricing data for analytics for energy and commodity markets. So it's one of the companies that really stands out for me at the moment.
Yeah, it's quite interesting because a lot of people in the financial services sector will actually pick banks. And I mean, what's your reasoning between then going for financial services but within the rating space?
You know, you are looking at what I call the moat, because if you look at the banking industry, most of the banking industries, we know them for the traditional roles, especially issuing credit and such kind of stuff. But if you look at this kind of a company, of course, we are talking about data, and data is one of the key things that is very relevant, especially in the current world that we are in. So any company dealing with the data, especially the financial in the financial industry, for me it stands out, and the reason why I picked the S&P Global Inc. Yeah.
Okay. Well, I mean, as you're talking about data, I actually then want to go into Marvell Technology. And obviously, we're talking about tech. That's been a really, really big theme. And, you know, a lot of people will pick the big companies that are due to benefit from this AI trend. But actually, people don't really dissect and look at the other companies that could benefit and that are actually cheaper than the Mag 7 that we know about. So just talk to me about your choice of Marvell Technology, what actually they do and how they fit into that technology landscape.
Yeah, I'm looking at Marvell Technology in terms of leadership in AI-driven semiconductor solutions, robust also, again, looking at the robust financial performance and also the strategic positioning in high-growth markets. For instance, now, when we talk about maybe probably some of its revenue generation, we are talking about data center being a key data center again here. So it's the largest, data center is one of its largest segment for Marvell, contributing to about $5.4 billion. So that is in the last quarter, the figures that came out in the reporting, the earnings report in the last quarter. And this again is really high demand, especially for AI and cloud infrastructure. So again, we are looking at it in terms of enterprise networking, whereby you find this is a key segment again, which generated about $693 million, again 17% of the market share. So it really stands out for me, especially its growth drivers, the AI cloud infrastructure. Looking at it also in terms of strategic partners, there is we saw the collaboration with industry leaders like Amazon and Microsoft, which again enhances Marvell's market presence.
I'm actually just wondering about the competitive landscape because you have a lot of these tech companies that are really, fighting for market share. Is Marvell Technologies well positioned to be able to defend their place in that increasingly and competitive space with competition quite tight?
Yeah, it's really, if you look at it in terms of positioning, when you look maybe for instance product innovation, we have seen quite some advancements in electro-optics and extended processing units, that is the XPUs and also the CPUs, which cater to the growing demand for high performance computing. So for me, I feel it's really quite well positioned, especially to compete with the big companies in this industry.
I was actually just looking at the graph for the share price, and it's actually had quite a run. Would it be wise to go in at this point and maybe coming from it, from a perspective of there's still more room for that share price to run?
Yeah, I think when I was looking at it today morning, it was about it's $6 per share, and I feel from the technicals, looking at the technicals where it is, we have been able to see some slight consolidations, which means that we might be expecting a breakout, and I believe it's in the right position, maybe probably to look for entries from where it is at the moment technically.
All right. Well, let's move on to CVS Health. What was the rationale behind, I guess, going for this company in that healthcare sector?
Oh yeah, this could be due to compelling investment choice, examining its income generation model, and also the competitive positioning. So if you look at the CVS Health, it operates in three primary segments. That is the pharmacy services. We have the retail, which we call also the long-term care, and also the healthcare benefits. So, for instance, if we talk about the pharmacy segment, this is a segment that encompasses the company's pharmacy benefits management services, including prescription of drugs. And so for me, it stands quite really strong, especially in terms of its strategic initiatives, such as acquisition of Signify Health, which we saw it was able to acquire Signify Health. That was back in 2022, and this sector, the Signify Health, has really been able to boost the financial for these companies. Another key drive we are talking about is we have been able to see the company look at ways to be able to cut to cut spending. For instance, we saw the closure of about 900 stores, which was about which helped the company to save about 2 billion shillings in terms of cost saving. And this is something that, of course, the investors want to see, because where there is savings in spending, it means we might be able to see more profits, and more profits, this being a dividend company, of course, means much more benefit to the shareholder.
And actually, there's been a lot of news flow in terms of, Trump's tariff landscape and, threatening a lot of healthcare companies overseas with and pharmaceutical companies as well overseas. So would you say that this company is positioned in a way that insulates it from, I guess, the kind of political moves that we are seeing under the new tariff regime, and maybe benefiting from this as well?
Yeah, definitely, because if you look at the graph of this or the chart of this company, it's been really quite good. Why? Because if you look at the tariff in pharmaceutical, I think some of the key impediments were that companies that are not operating in the US, these are the ones that were really going to suffer so much from the Trump tariffs. But companies that already have established themselves in the US, or those that are planning to establish themselves in the US, were not being affected, or are not being affected by the pharmaceutical tariffs. I think, and this company is a US company, so of course we don't expect it to be affected as such.
Yeah. All right. Well, thank you so much for your time and for your insights there, Timothy. Really appreciate it. That was Timothy Kiarie from Scope Markets Africa.